Success isn't a map you can follow. It starts with a spark of curiosity for the unknown, dedication for the unlearned, and innovation to pave the way for the next generation of leaders. These are the makings of our entrepreneurs who are redefining this industry by bringing the real in real estate. Real people, real experiences, real excellence. Welcome to the Real Relentless Podcast by Century 21 Tricities, a real estate brokerage in Eastern Washington. Today, our guests are Carman and Jordan Barnhill, two extraordinary agents with Century 21 Tricities. We will be discussing whether or not the Tri-Cities is in a housing bubble and what that looks like past, present, and future. Gentlemen, please introduce yourselves.
Thanks so much for having us on today. My name is Carman with Century 21 Tri-Cities.
And my name is Jordan Barnhill, also a fellow agent here at Century 21 Tri-Cities, and we are going to be talking if we are in a housing bubble here in the United States market, but more so focusing in on the Tri-Cities area. And so, Christian, would you like to get it started with our first question here?
Yeah, so pretty much off the top of everyone's head, you guys are probably wondering, hey, are we in a market bubble? So let's kind of dive into that a little bit and talk about exactly what a market bubble is. So, from the top, kind of what happened back in 2008, that's where most of you guys are probably familiar with a housing bubble and how it works. So, how kind of the housing epidemic started back in 2008 had to do a lot with like the lending practices that were used back then. You've probably heard of subprime mortgage and how all that went down. Pretty much what happened is, these lenders were pretty much just handing out loans to anyone that had a breath, per se. There were even some cases where lenders were giving loans on pets, people using their pets' names as applicants on the loan process. So literally back in 2008 and stuff, people were getting approved with sub 500 FICO scores, horrible debt to income, and the lender practices were just kind of thrown out the door back then. Whereas now we've definitely gone into a more regulated industry because we know we don't want to have something like that happen like it happened back in 2008. So Jordan can kind of dive into how things are a little bit different now and how kind of we have stepped away from a housing bubble per se. Because there are a little different logistics now this time with like COVID happening and the supply and the demand, and lumber prices are crazy and stuff. So Jordan, what do you kind of have to say about how we're a little different in this situation than we were back in 2008?
So back in 2008, there were really no rules for lenders. Obviously there were some in place, but it was very easy for these lenders to bend the rules in order to supply their buyer or their client with the approval for a mortgage loan. And what was very popular back during 2008 was subprime mortgages. And so those subprime mortgages, they were made up of basically just a bunch of AA and AAA bonds. There was actually no real value for them. And so back then they were really, like what Christian was saying, finding a cosigner anywhere they could to add more, add another buyer onto the loan, add more income. And I've heard lenders taking whiteout to W-2s in their tax forms back in the day, just because they could give out a loan to anyone and everyone. When they created the subprime mortgages, I believe they created those back in the 80s. Mm-hmm. And what the subprime mortgages basically are is they're able to give out these loans to people because they're adjustable rate loans. And so basically meaning that when you get the loan, your lender is going to be telling you, hey, your first month payment, you're going to be locked into a 3% interest rate. Everyone's happy. Everyone's excited to get the house. And what these subprime mortgages do is 1 month you could be at a 3% interest rate. The next month you could be at a 17% interest rate. And so they adjust. And that obviously is not healthy for the market, especially when there are buyers that are barely having enough income as is. And so that's what kind of, made us all go down the toilet back in 2008, was all these lenders being able to grant these subprime mortgages to buyers when they really couldn't afford to buy a house. And so they really kind of, there was no rule book for lenders back then. They were kind of going off a black book, is what I always tell my clients, and giving out a loan to everyone and anyone. And that's what kind of got us into that housing bubble, was these people who were buying a house, they actually could not afford to purchase a 30-year mortgage. And so, and then really kind of describing what exactly a housing bubble is, and kind of how they explain that is, if you can just imagine a bubble, literally a bubble, and as these subprime mortgages are being handed out, the bubble, it grows bigger and bigger and bigger, and what goes up must come down, and so eventually that bubble can pop. And that's what happened back in 2008, when these folks, they were putting their homes into foreclosure because they couldn't pay their 17 or 20% interest rate. Therefore, they can't buy the house. And so it got foreclosed back to the bank. And I know back then in 2008, there was a lot of purchasers and borrowers who could not afford their monthly mortgage payment on a basis and whatnot. And so that's basically what the housing bubble means, is the bubble, it just grows bigger and bigger the more subprime mortgages that are handed out and to non-qualified buyers, and it eventually pops and it starts going the opposite way.
Exactly. Just like he was saying, the adjustable mortgage increase really kind of changed the game. When the feds raised their rates back in the day, housing prices plummeted. People could not refinance. People could not sell their home for what they bought it for. So it caused a lot of those borrowers to default. And back then, people didn't just have like one house. It was so easy to have a house. People would have multiple houses and multiple mortgages, and had a lot of people renting it out. And so those people could not pay, and then the landlords couldn't pay, and it was kind of like a dominoes. And that's what kind of led to, the 2007 banking crisis, the 2008 financial crisis, and then next, the Great Recession that we had. So as we go into this time in 2021, how we are a little different is there is a supply and demand issue. Locally here in Tricities, we only have 120 homes on the market actively as of today. So that means we are at like a month or two's inventory out there. So usually on a regulated market, not necessarily a seller's or a buyer's market, we would like to have 6 months of inventory out there on the market. So we would meet demand and supply. So when we're dealing with only 120 homes on the market, and COVID-19 kind of, having builders, not build for a couple months due to us being in phase one and kind of being at a sedentary period of not really knowing what was going on back in March, it really, put things back a few months, but it did not stop the demand. And so now we see a lot of new buyers coming into the market that have money, the millennial demographic, as well as some Gen Zers demographic, that are now stepping up to the plate and wanting to buy. So we're dealing with even more buyers than ever before, but with less homes than ever before. For example, we have the inventory of homes for sale. It rose from last year, because last year, it was, we didn't have a lot of inventory just as much, but this year's even worse. We're down by 28% year over year on homes on the market. So you can probably understand what is that's doing for those buyers. That's creating very competitive, opportunities. They're having to go $20,000 to $30,000 over asking price. They're having to waive all these certain types of contingencies that you really want as a buyer to protect your investment, right? So we're really at a tipping point. I wouldn't necessarily say we're in a housing bubble now, because like I said, we have that supply and demand issue. So once we take care of that, then I think we could foresee things slowing down. And, I don't think that supply and demand issue will be taken care of until like the mid 2022 time period. So, I mean, like I tell everyone, you buy now, sell now, because if you sell now and you want to rent for a couple years or a year or whatnot, you may be kicking yourself in the butt, because you'll be thinking back in 2021 when prices were a lot less than they were in the future. It's hard to tell that exactly will happen, but, with the supply and demand and us working in the industry each and every day, that's what we foresee, will come in the future. Just the leaps of demand, as well as, builders not being able to build fast enough, land's not being put for sale as much. It's getting, developed quicker and stuff. But, yeah, so that's kind of how our market is right now. We would definitely say that we are in a seller's market. Like I said, there's only 120 homes on the market. So when you're selling in this market, you have a lot of power to dictate to the outcome. Pricing is very important. Staging and, how the pictures look is very important. But at the end of the day, yeah, the seller has most of the control in the transaction due to how few of homes are on the market in this day and age.
Yeah, and I have been seeing, homes sell of an upwards of $50,000, and kind of going back to why we'll never really be in another 2008 predicament is because the types of offers that we're seeing in this market lately, they're beyond strong. And so now with COVID, especially when COVID had approached last year, it is hard to get a loan now. You need to provide all your W-2s for the last 2 years, bank statements, as well as your pay stubs. And myself, being a self-employed, it's especially hard for self-employed borrowers to get a loan during COVID. And I remember I was actually purchasing a home about 4 or 5 months ago, and oh man, these underwriters, they gave me a run for my money, and they wanted more than 4 months worth of my bank statements, 4 months worth of pay stubs, and I had to provide more than enough documentation to show them that I was able to get pre-approved for a loan, because what they're trying to avoid, these underwriters and these lenders, is going into another 2008 scenario, because now there's a large influx of buyers that can actually afford a monthly mortgage payment, and it falls within their debt to income ratio because the rates are so darn low right now. And so that's also relating back to us being in a seller market. There's many reasons as to why we're in a seller's market right now. Not only our rates are at a historic low, but in the Tricities here, when I'm talking to my clients who have lived here locally for, over the past 5 to 10 years, or even grew up here, we're looking at each other and looking at these prices going, oh my goodness, this is insane right now. But then when you see these folks coming from the Seattle and the California, Portland area, there's larger metropolitan areas, they're looking at the real estate prices saying, geez, this is cheap. I could get used to this. And so that's what we're kind of seeing a lot of lately is we've been working with so many folks from out of state, and they're coming down here to the Tri-Cities. One, our real estate's cheap. Our taxes aren't too bad. We don't have any traffic. We have tons of growth here. We're in all 4 seasons, and there's no riots, which is also a huge plus why people like this area. And so, it's not only the, relatively affordable real estate market over here, but also the rates. I have someone coming down here from around Seattle area right now, and they're renting out a 900 square foot apartment for $1,900 a month, and I'm about to put them into a 2,300 square foot one level home for the same monthly payment here. And, that's going to be ideal for them because they're not going to be paying someone else's rent while renting out there. They're going to be actually putting money into their mortgage and actually going to see that return once it comes back to them. And so, the rates have never been this low, and there likely could not be a better time to purchase a house because ultimately, like Christian was saying, supply and demand and competition determines the price. It's not necessarily what things were selling for a year ago, what things were selling for 5 years ago. It is the large influx of folks that are moving here, driving up our supply and demand and our competition. And that's why these things have been absolutely skyrocketing in bidding wars and pricing.
For sure. So, like, how long do we think the housing frenzy is going to last then? Because if we have, demand continuing to go up, we have these very vetted buyers who, are able to make these purchases, but we have people not wanting to sell or move away from the area or to keep their equity, or landowners not selling. How long do we see this kind of frenzy last here, do you think, Jordan?
So I believe, so I was actually talking to our boss last week, and not to put you on the spot or anything, Vicky, but I asked her the same question. I was I'd just lost out on an offer with a buyer on a home that had over 26 offers. And I was talking to her and I was like, how long is this thing going to last for? My boss was telling me that she had been talking to a contractor who is in charge of building some of the larger commercial buildings here, as well as the schools. And they are locking in contracts that are set for the next 20 years and literally doing lumber bids that they're trying to get locked in within the next 3 weeks. And so I was surprised when I had heard that, considering lumber has gone up in upwards of 200 to 250% just in the last year, and thought it was kind of crazy that these folks who are planning on doing projects for the next 20 years in the Tri-Cities with building schools, they're trying to lock in their lumber bids as soon as possible. And so that kind of goes to show and tells me that if these folks are willing to take, that of a long-term investment and still want to purchase all of these materials while the prices are at all-time highs, that this is just going to go higher. And that ultimately kind of just trickles down to supply and demand again. I mean, our area, Tri-Cities just surpassed over 300,000 people. And once an area does surpass 300K, it's now labeled a metropolitan area. And so we're now seeing a large influx of not only people coming down here to purchase real estate, but also businesses. I mean, I know we're getting a Costco on Road 100, and I mean, there's just tons and tons of growth, not only coming for real estate, but for the franchise and the commercial side of things as well.
And speaking on that, new additions to the Tri-Cities, if you guys don't know, there is going to be like a Pike's Place style market going to be put into the Port of Pasco over there on Osprey Point. You guys maybe know that we are getting the first manned nuclear reactor in the United States over in Richland with Hanford. Like Jordan touched on, the 300K population, we're now moving towards a metropolitan area. And also, there's developments going around the whole city. For example, like on Thompson Hill, they're trying to rezone that to from low density to high density, and build a bunch of homes up there, as well as like a boutique hotel. I know over in West Pasco there's some developments over there down by the river and stuff. So there's lots of upcoming plans in the future, whereas it would be different if we were in this position, there was no plans coming up in the future. Then we might be concerned. But me and Jordan personally do not see a standstill in Tri-Cities. We were born and raised here, so we've grown up and seen the growth kind of firsthand. And it's just going at an exponential rate now. So I can even imagine in the next 5 to 10 years how much growing we have done compared to the last 5 to 10. I'm really excited for it, and I'm eager to be a part of it as well. I think it's going to be huge.
Yep, couldn't agree more. And so another question we got asked was, how has COVID-19 impacted the local market here? And I mean, I believe right when COVID started, right around March last year, every agent, every brokerage, and really all listings and people that were on the search, everything kind of went at a standstill. I mean, what Christian was saying at the beginning of this podcast was no one could predict the future and what was going to be taking place and whatnot. And so what the Treasury and what our Fed and our government did in order to kind of combat that standstill was they're like, hey, well, everything's at a standstill, nothing's getting sold, but we still need to keep this economy propelling. And so they went ahead and started dropping the rates to historic lows. And they pretty much thought that, hey, if we can, make rates at an all-time historic low, that means a lot larger influx of folks are going to be able to qualify to purchase a house. And so that's one thing that I noticed quite a bit right when COVID had happened was folks were like, wait, I know everything is kind of weird right now. I'm not sure how I can even go look at houses or even if we're allowed to go look at houses, but I'm looking here and I'm looking at the rates today and I'm reading the news and it's saying here that I can get an interest rate below 3%. And so either I'm refinancing or I'm selling and I'm trying to buy a brand new house. And really, I mean, I remember back 4 or 5 years ago when rates were around 5-6% and people were running around in a frenzy going, oh my gosh, the rates are so low. We have to buy right now. And so those folks that bought, let's say 5 years ago with bought 5 years ago with a 6% interest rate, and they bought a $200,000 house, they probably and very likely had built up, possibly 100% return in equity, and they can flip around and sell that $200,000 house for at least $300K. And so not only do you have $100K cash of a return from the home that you just sold, but you can also get locked in at a historic rate and really be paying the same rate on a $200,000 house with a 6% interest rate versus a $400,000 house with, let's just say, a 3% interest rate. And so, I mean, your monthly payments are going to be darn near the same. And another plus side of that is that you can have a very large down payment to put on your house, or always save that money and put it into another investment. And so, I mean, really, everyone that purchased a home even 5 years ago in the Tri-Cities today, I could guarantee has at least $100,000 of equity built up. And I'll kind of relate it to a personal experience of mine. I had a close friend of mine purchase a house back in 2015 for $187,000, and he got locked in at a 6.25% interest rate. And while myself, when I was purchasing a house, I bought a $340,000 house with a 2.875 interest rate back in January when rates were at the lowest. And so my close friend, he's moved on. He's in a different house now, so this is just kind of old news. But with his $185,000 loan at his 6 and some change plus interest rate, he was paying approximately, I believe it was $1,700 a month, as to where myself, when I purchased my house with, cut that rate, more than half down, and I take out a loan that is literally almost times 2 of what my friend did, and my monthly payment is almost the same as what his was when his rate was around 6%. And so that kind of just goes to show that not only do you have tons and tons of more buying power right now, I mean, you also have a very low monthly payment. And so that's what kind of the rates are doing. It's able to give you a lot larger of a buying power right now.
Wow, Jordan, it sounds like it's the perfect time to buy then. Well, what would you say about lumber costs? Because I know you work a lot with like new construction. So how has that kind of affected or played in tune with COVID in pricing and stuff like that?
Right. I mean, it's affected it, I think, more than anyone was going to predict. I mean, even builders, there still are builders right now that are shelving their pricing and just trying to figure out these, large influx of lumber costs keep going up. I mean, they're literally hitting all-time highs week after week. And so I know right when COVID struck around February to April last year, the lumber companies here in the United States and Canada and, around the country and even, in other countries, they had to come to a standstill. They had to shut down all their operations, and these lumber companies were not able to produce any lumber for almost about 2 months. And I don't think anyone, not even, ourselves being in the real estate industry, buyers or even contractors, builders, or even people that worked in the lumber industry, and even the government, the Federal Reserve, I could guarantee that they were not expecting the rates to affect the market like they did, putting the historic low interest rates. And I know that, it wasn't really the lumber company's fault, but I bet you they are wishing that they could have continued production, because them shutting down within that 2-month period, right when they shut down, lumber production literally went to the floor. But as the low rates came at the same time, the buying went up to the ceiling. And so what that pretty much did when they were at a standstill for 2 months, and there is a lot of people buying, there's people wanting to build with new construction. And when they go back to these lumber companies, they go, hey, I need, X amount of OSB or X amount of, I need this. We're building houses. And they're like, well, we've been shut down for the last 2 months. We don't really have what you need. And so that also kind of falls into the supply and demand issue right there, is they were shut down for 2 months. So they got very, very backed up, and a lot more backed up than I think they ever expected, because they didn't think the home buying market to be this crazy at that time. And so what I've been seeing a lot of is, everyone is purchasing. There's so many home buyers out right now and not enough listings. And so next best thing that you can do when you can't find a home that is previously owned, just because there's so little of them here on the market, not only in Tricities, but throughout the US, is let's do new construction. There's a lot of benefits to that. I can customize my own home from foundation to completion and, customize it to myself. And so a lot of people are going that route. And that's what's happening. The lumber, there's just supply and demand issue. The lumber companies are so darn backed up because of all the people building houses that they just have to keep raising these lumber costs to basically accommodate with the amount that they're having to build at their lumber production places, as well as the employees that they're going to have to bring back, and all the middlemen that they're having to connect to basically give this lumber to distribute to the builders, the contractors, or the companies, the lumber companies that the contractors or builders purchase off of. So it's not slowing down. And like we both said, lumber's almost kind of relating to the housing market. It's the supply and demand, and competition determines the price. And so that's why it's been going up so much lately.
Exactly. And on top of the housing market, people have been at home for the last 9 to 12 months and have been completing like do-it-yourself projects. And so there's been, the general public has been having a wood demand as well, to remodel their home, or to like add a deck for improvements, or, to do a bunch of, meticulous things on top of the housing demand, that's also eating up the supply. So, relating just like back to Jordan said, it's a supply and demand issue, and the competition really dictates the price. So that's kind of really how COVID's really impacted our market here locally, as well as on a national level. It's a seller's market nationwide. There is, less homes on the market than ever before. So how do you win a home when, it's a seller's market? Like, what do you have to do to win out on an offer in our market? Me and Jordan can touch on some things, but it really... Honestly, at the end of the day, it's really going to come back to how much can you pay for this home. At the end of the day, a seller's not really looking for, in this market when it's so hot and homes are going in 19 days on average, sellers are really looking at the price. Yes, a closing date that's accessible to the seller may help a little bit. Maybe a cover letter may help a little bit, but we've seen an influx in price of just about $20,000 in the past month or two. So things are always moving. So you need someone who is experienced and can communicate and can let you know what you need to do to win that offer. Because if you're working with the right agent, they're going to know what is necessary. You're not going to have to come up with those things. That's our job, right?
Right. So. Yeah, and like Christian was saying, the market, it's crazy right now. What's really probably the most important things to sellers is, okay, yeah, you're telling me that you can, let's say I have my house listed at $300,000, and, your offer, I have 25 different offers on the table. Yours has the highest price, but even though yours has the highest price, how can you back that price up? Okay. And so does that mean, we can come to an agreement of, if I know that a lot of sellers are worried about low appraisals right now. And what I've been, myself using a lot of, as well as Christian, is a, additional down payment in case of a low appraisal. And that basically stipulates that, hey, Mr. Seller, I know you have your home listed at $300K. I know I'm having to bid out another 25 offers. So here's my offer at $350,000. Obviously, if at fair market value, what it's listed for, $300K, and just because of all the competition, you're having to come in drastically high. And so either, cash is king at the end of the day. I mean, there's no appraisals, no lenders, no banks involved. And quick to close. So that's what's going to probably be the most important to a seller. But really, I mean, it's not too common. I'd say every, 1 out of maybe 40 buyers are all cash buyers. And so what's the second best thing you can do is, okay, do I have a good lender on my side? Is he recommendable? Is he familiar with how crazy this market is right now? And a huge important thing is if you can back up that huge, over asking bidding price that you just put in. And what I mean by that is, let's say if you put a house under contract for $50,000 over asking, that's what you had to do to get the home. You beat out 25 other buyers. Everyone's happy. But the only thing that's going to linger in the back of the both seller and buyer's mind is, well, what if there's a low appraisal on this? And so it has been common. I've been getting hammered with the low appraisals lately, but it's, either, you take a chance and have to bid very, very high on this property, or you don't get the property and you risk that, or you bid high on it and you risk having a low appraisal, or, you be modest with your offer and you don't get the home and, you're on searching for the next one. So I always relate to my clients. I'm like, hey, is this the one for you guys? And if they tell me yes, they give me 2 thumbs up. I say, okay, guys, this is what we have to do. We have to do X, Y, Z in order to get you the house. Everyone is looking for a deal when purchasing a house, and unfortunately, we would love to do that for them. Yeah. Don't get us wrong, but it's just not the market we're in right now, and you just have to be very, very competitive in order to make your offer stand out and make it the most enticing to the seller. And and so what we've been seeing a lot of is, just because sellers are worried about low appraisals, as well as a lot of agents like myself, is you're having to basically bring certain clauses to your contract that say, hey, if the appraisal comes in $20K low, I'll cover that right there. I will add on another $20,000 of my loan, and that basically means that, the bank is only going to give you a loan. Let's say if you went under contract for $350K and the appraisal came back at $330K, that means the bank is only going to give the buyer a loan for $330,000, and that means for not a $350,000 house. And obviously, things get a little bit sticky right there, because when that time comes, you've already been in contract with that seller for over a month, working towards the goal of, hey, we're closing on this date for $350,000. Everything's going to plan. Both buyer and seller are. And so right when a low appraisal comes in, it kind of throws a wrench in the gears, because there's a few ways you can work a low appraisal. It's either the buyer has to come up and put cash down on top of their loan to basically make it come together at that purchase price, or the seller has to come down, or they can meet in the middle. And and so what they're saying is, back up this $350,000 offer you have. We want to see that you're willing to bring additional cash to the table to give to us to meet that purchase price in case of a low appraisal. And, if you can't, then we're going to go with someone who can. And in this market, in that $300K price point, unfortunately, I just lost out on a buyer that had over 26 offers on the house, and it went to a cash buyer. And so, that's just what we're seeing quite a bit of lately, unfortunately. But, yeah.
Exactly. It's a tough market out there, but you got to have the right real estate agent to help you, because that way, this agent, they already know everything. They've been experienced and have won out on multiple offer situations. So it's good to have someone that has your back and knows what's going on. Hey everyone, just want to say thanks for listening to the podcast today. It's our first Real Relentless podcast. We would love to invite you back to our next episode. But once again, my name is Christian Carman with Century 21 Tricities.
And guys, couldn't thank you enough for tuning in. There's quite a bit to cover when it comes to the housing market and bubble. And Christian and I, and as well as our other brokers here at the office, we could probably go on for days about it. Once we start talking real estate, we really don't shut up too much. And so, right. I couldn't thank you guys enough for tuning in. And if you have any questions pertaining to anything that we just covered, or about the market, if you're looking to buy, sell, feel free to reach out to Christian and I. We'd be more than happy to take care of you guys and make sure it's a seamless process along the way. So, thanks for tuning in, and wait for the next one.
That's the end of our podcast. Again, your hosts today were Christian Carman and Jordan Barnhill, real estate brokers with Century 21 Tricities. You've been listening to Real Relentless, a podcast for all of those curious about the real estate industry. Thanks for tuning in, and we'll see you next time.